first candle comes in as bearish. Second candle comes in bearish. Huge volume. Why is that important? Because what happens on the fourth candle? Fourth candle closes above the biggest bearish volume bar on your screen. That is a big deal. The volume doesn't have to increase on that candle because all the people who are shorted are trapped. They're already losing. That's the biggest misconception of all time with trading volume. Volume does not have to be massive in order for the stock to go up. You just simply have to have more demand. And more demand can come from bears or bulls getting trapped on a trade. So once this candle comes in, even though it's less volume and it closes above this candle, as soon as that happened, I go, all right, we're going to fade guess today. So you might say, well, Newsom, why did it retest? Because it just moved 45 cents. That's a huge move. This candle volume was lower than both bullish volumes. So it's lower than the bullish volume. So since it's lower than the bullish volume, that means technically that the volume increased on the breakout. So therefore, be looking to go long. So when this candle comes in, all right, bullish candle, it has less bullish volume. So it's like, okay, you know, it's kind of cool, whatever. Volume's not that great. Again, volume's not that great. Volume's not that great. But check it out. Check it out. When this candle comes in, same exact thing. The bear volume is still less than the previous bullish volume. This is how I decided to take this trade. Is the bearish volume was less than the bullish volume when that happened. I was like, oh man, the bulls are strong at this point. So when this candle comes in, you now get all of the bullish volume. That bullish volume is more than every bearish volume candle on the screen except for the first two. And that doesn't really count because of the first two. They're always going to be the most. So that's why after that candle came in, we got in here. That's why I was kind of talking about I should have gotten in like 1879. It's pretty much based on this bearish candle right here and the high of this candle right here. It retested. It made a new high where I should have exited 10%. Retest. So we held through the retest. Why did we hold through the retest? Bullish, 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 no volume. No volume whatsoever. So I ain't scared. And then tweezer bottom comes in right here. Volume looks good. And then, you know, it trades up. And again, we exit 10% right here. And, you know, I mean, it was a winning trade. It was a profitable trade. So profitable trade entirely based on, well, really volume. And so it was intraday volume plus look at the volume from yesterday. The last two candles. Last two candles had what type of volume? Massive bearish volume. Exactly. Massive bearish volume. So you have massive bearish volume. Those traders are doing what? At market open. They're buying to cover. Exactly. They're exiting their position by buying. And that's going to create demand.